I've been able to negotiate over $2 million a year in tech offers. I'm going to show you what I've learned over the years of negotiating. The fact is that when someone fails in a negotiation, it usually comes down to not understanding this formula. Salary negotiation actually happens before interviewing. And the way that I prep is that things that are not negotiable now can become negotiable later. So the first thing that happens during the recruiting call is that they ask you about your salary expectations. And of course, I've heard this a million times. I didn't negotiate my first offer, but my first negotiation gave me $100,000 more, and I've been able to increase every single time since then to over $2 million a year. But I'm not some sort of super genius. I just learned from people who are smarter than me and learned from my mistakes over the years. I've been super fortunate to be able to learn from a VP of Meta, a director at Google, people who are in the executive suite of large, fast-growing startups, executive recruiters who have seen many of these negotiations over the years and have a lot of data, venture capitalists, as well as people who negotiate mergers and acquisitions deals for big tech companies. So shout out to all of the people who have helped me over the years. I'm going to try and distill the things that I've learned over the years so that you can use them in your next negotiation and not make the same mistakes I did. I'm Colin Late. I'm a tech executive who's worked in Silicon Valley, Seattle, New York. If this is useful to you, please like this video for the algorithm so many more people can get value from it, or share it directly with someone who's about to look for a new job. And I've made a lot of mistakes. I even made mistakes in my last negotiation. Every single time I've reviewed how I've done negotiation, I've realized that there was more money on the table. So of course, a lot of people ask me why negotiate. There's a big payoff over the course of your career, as you saw with mine. It's really hard to move your pay up after you've got into your role, especially at the big tech companies. It can take years, like 2, 3, 4 years to get your next promotion. And your bonus and your raise for your salary every year is based on whatever your starting salary was when you got into the role. There's no time when you have more leverage than when you're first starting at a company and getting your first job offer. It also compounds over time, and not just the salary compounds over time, but you get better each time you negotiate. So when those big ticket negotiations happen later in your career, you're going to be way, way better at doing it. But I hear on a lot of forums, but I negotiated and it didn't work, so nobody should negotiate. But the fact is that when someone fails in a negotiation, it usually comes down to not understanding this formula. In order for negotiation to be successful, the other side needs to like me, think I deserve this amount of money, justify it internally. This is a huge one. And also think you're winnable. So you need to be likable. So if you're a jerk, you're not going to get a negotiation done. They need to think you actually deserve it. So you are going to have to argue and justify your side of things. And you're going to have to do really well in the interviews. They're going to have to justify it internally. And I'll talk a little bit about how you can help them do that. But they also have to think you're winnable. So if you negotiate too hard or you bring in a counteroffer that's too high, they might think you're not winnable and not try and negotiate at all. I got this formula from Deepak Malhotra from Harvard Business School, and I don't usually like using professors for my frameworks, but he has worked with a lot of top executives of big companies in negotiations. And some of the parts of this formula actually conflict with each other. For example, as you're negotiating up your offer from the first offer to the time you sign, they're going to like you coming out of the interviews at the beginning. But as soon as you start questioning whether they've actually valued you the right way and questioning the offer they gave you, they're going to question whether they like you as much. But by the end of it, if you did the negotiation really well, they should like you even more and be super, super enthusiastic to have you on board. As a hiring manager, the way I think about it is I actually feel better about catching that big fish who is a bit of a struggle versus catching a bunch of minnows really easily. If I nab someone after a really good negotiation with them, I usually feel way better about the hire, especially if I respect the way they negotiated and I get this perception that they're more valuable than I thought they were when I first gave them that first offer. Of course, when I say I'm making people like me or think I deserve it, who are these people? First, there's the recruiter. That's obvious. This is your liaison. This is the person who's going to speak on your behalf internally at the company, and you need to have a really good rapport with your recruiter. However, the recruiter isn't the only one that makes the decision, is definitely not the one who's going to make exceptions for you. The hiring manager is your future boss, and this person can be an amazing advocate in the process, which I'll talk about later. The other person is the skip manager, who's your boss's boss or the executive that owns the budget where you're going to fall under. If you have interactions with this person, you're able to get them to be on your side and make even bigger exceptions to going outside the pay band. And then finally, there's usually either a compensation committee, especially at the bigger companies like Google and the rest of FAANG, or just someone in finance who manages the budgets and manages the compensation. And they work with HR to figure out what's an approvable compensation. And as you get to smaller companies, it's much more flexible. At the bigger companies, you have to be a bit more intentional about how do you justify internally to this compensation committee why they should make an exception. But it happens literally every week. So salary negotiation actually happens before interviewing. And the way that I prep is that I make sure that I have a strategy. How do I line up what offers I want to get at what time? How do I make sure that I'm prepping for the right interviews at the companies that may not be my very top choice before I go into the top choice companies? How do I make sure that I have enough of an alternative so that I have some sort of internal or external leverage for my negotiation? That type of strategy is really important as you go into this. Then I make sure I do my research. I set internally for myself an anchor and a target number that I want to go for, and whether I care about equity or cash more in that specific point in my career. And then finally, I make sure that I have a template script and that I mock negotiations going into these things. A lot of people spend so much time, hours and hours, dozens of hours, hundreds of hours even, preparing for interviews, doing leak code or doing PM interview exercises, and they don't prep at all for doing their actual negotiation, which can make a huge difference in salaries. You're talking about $50,000, $100,000. A lot of people will say, what does leverage mean? What does an alternative mean? I don't have a million offers. I'm not like you. Let's talk about leverage. You might hear the term BATNA, or best alternative to a negotiated agreement, but all this really means is what's your next best choice, and are you willing to walk away? Thing you want to do with leverage is avoid desperation at all costs. So, like in the worst case scenario, you got laid off and you have 30 days, 90 days to leave the country because you're on some sort of visa that expires. In that case, all you can do is control your emotions during the negotiation. You may not have a lot of alternatives and you may be settling for a stopgap job, but it doesn't mean you can't command a little bit more money depending on the market conditions. Now, research has shown that the best correlated predictor of how much money someone's going to get paid when they get a new job offer is based on their expectations going into that of what they're worth and how much they're going to get paid. So one of the best pieces of leverage is actually psychological. How much do you expect to get paid before you go into this interviewing process? That's going to affect how you behave in very subtle and hard to control ways that are going to change your demeanor and change the emotions of the other side to help you get a more negotiated agreement. Sometimes you have to break your frame. And I'll tell a story because I had to break my frame when I first got offered a director position because there was no levels to FYI back then that had director role compensation data. I had no idea how much it could be worth. I was able to find out that it was worth 2 or 3 times as much as I could have had before. So I negotiated for that. I got almost exactly what I expected going in. Then I found out my colleague who got hired a month later actually got 30% more than me because their expectations were higher than me based on their last role. So expectations are everything. Make sure you increase how much you value yourself, and it's going to pay dividends in your negotiation. If you are in a current job, then that's great because you can improve your situation in your current job. Many people I've negotiated with from the other side of the table have told me that they have another offer on the table for a promotion at their current job, or maybe they have some vested equity that's coming up, or a bonus that's coming up, or maybe they're going to be getting a title change or a new project. There are many different ways to create leverage within your current job. And for most companies, this will work really well. And the other piece of leverage is how well you do in the interview. So make sure you're warming up and not doing your top company interviews first if you can help it. But the other thing you can do is apply for, get referrals for, and make sure you're in the process with bigger high-paying companies that are well-known, and you can use this to leverage against your top choice. And specifically, you should interview at FAANG if possible, but I guess it's called manga now, thanks to Meta. So you're going to find yourself in one of 3 leverage situations. The first one is that you have many counteroffers, and this is great if you handle it appropriately and if those counteroffers are actually relevant to the person you're negotiating with. The second is that you have no other offers, but you're actually willing to walk away or stay at your current job. And that's also a really good way of negotiating. And many people, especially over the last year when it was harder to get multiple offers at the same time, were able to negotiate without other offers on the table. And the third is that this is your top choice. You want to be here. You don't have any counteroffers, but you still are able to negotiate. And the way to do that is through your internal framing, your ability to use market research and data, and by building advocacy within the company with the executives and your hiring manager to make sure you can get what you deserve. So before you go into the negotiation, you have to also do research. You want to go to levels to FYI, blind, definitely not Glassdoor or anything like that, super inaccurate. This will work for most tech roles. Your software engineers, product managers, product designers, product marketing even now I think has some, but you want to make sure that you look at recent data in your location if possible. And if that doesn't work, you want to try some of these other options. And if your company doesn't happen to be on there, you want to find similar companies or competing companies. So, for example, let's say you were going to interview at Databricks, but there wasn't a lot of data on levels there, but there might be a lot for Snowflake, their competitor. You can usually use that as at least one data point to support how much you should make at Databricks. Companies that are competing with each other definitely don't want to lose candidates to the other and definitely want to make sure that they're competitive in their pay. I've definitely done this in my company. I just looked at what is the next industry leading company in my space and use that as some of my market data. And this isn't done nearly enough. You can sometimes just talk to other workers at that company or who used to be at that company who can talk openly about what they've seen, especially if they're a level or two up from where you are. And then, of course, there's these third-party recruiting firms. They have market data, surveys, and lots of recent experience because they're usually in the middle of a negotiation. And then, of course, venture capital firms have a lot of salary data helping across their portfolio companies. And then executive recruiters also have access to that data and their own proprietary survey data. So there are three numbers that you want to develop out of this research. The first one is your anchor. What is your crazy hard number? And if it's making you super uncomfortable, it probably isn't even high enough for you. The second is what would you be really happy with? What's your target number? And ideally that's a top of band number or even above top of band if you want to really stretch. You usually don't get to your anchor number. The third one is how much do you really value yourself? If they gave you under this number, would you actually walk away from this offer? And honestly, you have to value yourself in these negotiation processes. Unless you really are trying to keep a visa or need to make a huge career step or need to just pay the bills the next month and you have no other options like no freelancing, nothing else, then you need to think about what is your walkaway number. And these numbers are for you, not for the other side. They're for you in that these are your internal numbers. You're not going to divulge them to the other side. You're going to give specific data when necessary when doing counteroffers for the other side. Now, when you get an offer, how much money you're going to be making in 1 year over the course of 4 years is called total compensation. And that's made up of your base salary, how much you get in your paycheck every month, your equity, which is your stock options, RSUs, whatever it happens to be, depending if you're in a startup all the way up to a big public company. And that's usually vested over 4 years, usually equally, but all of these things have exceptions. So it's hard to make a video about Google or Uber or a IPO company or a seed stage startup all in the same time because all of them have slightly different ways of doing equity. I can probably do a whole video on equity just for startups, growth stage companies, and FAANG. And then the other one is performance bonus. This is usually like 15 to 25% given based on your performance and the company's performance every year. And so it's important to get your base salary up because your performance bonus is actually based on whatever your base salary is. And then there's a sign-on bonus. And this is usually the sweetener, the very last thing that you're going to negotiate during the process. It's usually used to close a gap in your total compensation. And it's a check that's usually given right when you start. And if you leave the company within, let's say, 6 months or under a year because it doesn't work out, you might have to give that money back. But this is a very powerful tool, especially because very few people actually last more than 2, 3, 4 years at a specific company, especially today in tech. And you're going to move to many different roles during your career. So you do want to make sure that you front load your compensation in whatever offer you're going to get. And then, of course, there are other things like 401k matching, whatever your medical insurance is. This can be more or less important to people based on their life circumstances. But total compensation isn't the whole value of your offer. Your offer value is actually made up of your total compensation, like we talked about, but also what's your total career value, or I would like to call it, how much is this your skip prep, not just for the next role after this or the next promotion after this, but 2 promotions after that. Is this going to fill in the rest of your skill sets so that when you go and apply for that next role or 2 roles from now, you're going to have the projects, the skills, and the experience needed to qualify for that next level. So you should really be planning this out when you're making your offer decisions. Of course, title, level, and scope all matter a lot. Title matters a little less than scope and level, but if you are going to certain companies, they do care about title. If you go to somewhere like your manga or FAANG companies, then they actually know based on your scope where you should be leveled, and they don't really care too much about your title. And the last piece is actually lifestyle, which matters a lot. Is it remote? Is it in your geographical region? Is it in a high cost or low cost of living area? Does it have an unlimited PTO, or is it only 2 weeks of vacation every year? These things are partly negotiable, but they are big factors when you're trying to decide between multiple offers. The main key points in your negotiation timeline are when you apply and figuring out which companies you're applying to when, how you set the expectations for level and title at the beginning, your first recruiter call where you can do more of that, but also understand a lot about the company and answer the question that they usually give you, which is what are your salary expectations. You also then can make sure that you lock in the right interview process for the right level and role that you want. Then you move on to the interview stage where the recruiter may still badger you with salary questions. The important thing to do here is to boost your value by doing well in your interviews and find more leverage. And then finally, at the offer stage, there's the pre-offer stage, the offer call. You're going to be doing some counters if you have multiple offers on the table, and you want to make sure that you build your advocates to go to back so you can justify things internally. Let's start with the first recruiter screen. In your first recruiting call, the recruiter is going to try and start the salary negotiations, but this is when you have the very least perceived value to the company. All they know about you is maybe some reference and maybe your resume. You have not done interviews. You have not figured out exactly what they need from you and told your story so you can increase your value over the interview process. This is not the time to negotiate. You want to make sure you do not negotiate here. Do not bring up your expected salary. You do not bring up what your past salary is. You try to avoid these questions. The recruiter wants to make their life super easy. They want to be able to close you. They think there's a higher probability of closing you if they can get you to commit to a number that they agree upon. And they might want to even weed you out saying, oh, this person is going to ask too much for this role. The problem is if you give them a number and they say, hey, that's too high from us now, you could probably give them that same number at the end of the process once you've got buy-in from the executive, buy-in from your hiring manager. You've given them lots of justification. You've rocked all of your interviews. At the end of the process, where then they say, this person is actually deserving this much, or maybe we need to give them a level bump or a new title, and we're willing to give them more money and make an exception. You can't do that in your first recruiting call. So during the first recruiting call, you don't want to weed yourself out. You don't have any leverage. You don't have any perceived value to the company. Make sure you don't negotiate here. Things that are not negotiable now can become negotiable later. So the first thing that happens during the recruiting call is that they ask you about your salary expectations. And of course, you've heard this a million times, never give them the number first. And this is a probabilities thing. There are definitely some situations that are not predictable where if you gave them a salary number first, you might have anchored them higher than they would have anchored you, and maybe you would have been able to get to a slightly higher number. In most situations, we're talking about 75% of the time, let's say, if you give them a number, you are really drastically putting yourself at a disadvantage because you might be thinking this number is $100,000 more than I made before. But for them, they might have thought you could have made $200,000 or $300,000 more than you did before. And you need to be able to discover their price first, what they think is their price, and then move them up from there. And you can move them up significantly, so don't worry about them giving the first number. Next, instead, you want to flip it and find out what their leverage is. Just like you have your own best alternative to a negotiated agreement, they have their own. How long have they been actually looking for this position? How important is this position? How unique is the role? What is their budget? Are they cash constrained right now? Are they raising a new round of equity if they're a startup? Did they just have a hiring freeze or not? These things are really important to understand how aggressive you're going to be in the negotiation. And then finally, you can negotiate the process. You want to figure out who needs to be the approver, how much time it takes, what are the stages between you starting the interview process to you getting an offer, to you accepting the offer and getting a specific equity and salary package approved. This is important because you can identify certain players that you can be talking to throughout the process and making your advocates. The other factor that's really important is what are they considering you for in terms of level? And usually this can be one level or two levels that they're interviewing for. And based on the interview process, you might go up or down. But if this is not the level that you think you're going to get paid what you deserve and is not the scope you're looking for in your career, this is the time to start thinking about maybe I should be interviewing at the level up. And it's better to do that before than after the process is over. So let's go step by step. What if they ask you, what are your salary expectations? You don't answer, you ask. For example, first, you can couch this by saying it's too early in the process. There's so many variables at play. And after I learn more about the company, and after I interview, and after I learn more about the role and the scope of the job, I'm sure we together should be able to get to something that's agreeable and get to a yes. Then you start asking them questions. What's your budget and band for this role? And remember, companies in California, for example, are required to give a salary band. However, they've fudged this law a little bit in that Google might have a salary band, but that salary band is actually comprised of three salary bands. There's the low salary band, the mid salary band, and the top of salary band. And they might give only the low salary band as the one that they tell you right then. It doesn't mean that within that level, that's actually the max amount they want to give you. And it's more like from a certain point of view, this is our salary band, because there are exceptions to be made. And there's just an extra step in an exception process to be done to be able to go outside of that band. to the higher bands. If they're a private company or an early stage startup, you might want to ask them, how did they value their equity today? And this is a question that you'll probably want to ask later on, but can help frame your expectations for how much equity you're going to get and whether they've over or undervalued their company at the current price. For example, companies may raise at the top of the market at a certain valuation, then all the public market comparables all drop by 30-40%, but they haven't corrected that in when they're giving out their offer. So you're going to actually want to ask for even more equity to get to what your public comparable offer is going to be. Then you want to ask them about the process. How are decisions approved? And then in some cases, you might want to ask them, what is your compensation philosophy as a lesser known company? Do you try and go after top talent? Are you looking for people who are really mission driven? What is your philosophy on this? And then if you're really confused, you could ask them, what are some comparable levels at Meta or Google who are top paying companies? And they might say, this is equivalent to an E5 at Meta. And that gives you a really good set of data points that you can go forward with later in the negotiation. No matter what they say, you probably just want to say, I'm sure we'll make something work later. Levels really matter. Levels are a pretty complicated topic. Thankfully, there's levels.fyi to help you understand what levels are at different companies for different roles. But figuring out which level you're going to be interviewing for makes a big difference in your compensation. If you look at these levels from Meta, let's say you come in and you think you should be an E6 and make $625,000 on average, but then you reveal that they're actually considering you for an E5 position. That's $225,000 on average in difference in compensation. So in that case, you want to make sure that you can justify to them that you should be going for an E6, figure out exactly what they need from an E6, try to get that interview loop, rock that interview loop, and immediately you've made yourself $200,000 negotiating in one conversation. The other factor here is that if you're an E5, it might actually take you 1 year to make any impact, and then 2 years and 3 years to even be considered to move from E5 to E6. Now, companies have very different compensation philosophies. Even between Google, Meta, and Amazon, there are big differences, but imagine how that changes when you go to Airbnb or Instacart or an early stage startup. There's a huge swath of difference in how companies think about compensation. And then a pretty simple framework is that there are companies that really just want to go bottom of the barrel. They'll get some market data from a third party and they'll say, this is the market range for this is how much we should pay for this role. And we'll target the 25th percentile, which is the lowest 25%. Another company might say, we want to pay top of market rate, which is usually the 80th percentile. We'll try and target on average, getting the 80th percentile in this bracket. We're willing to throw a lot of money at people because we want the best talent. That's going to matter a lot to us. And that changes for the companies by function. Maybe a company is more product driven and really wants the best product managers. Another company might be more design driven. Another company might care only about AI researchers and they're willing to pay them a lot while they pay their other engineers a little bit less. So it makes a big difference between different companies, what their compensation philosophy is. And that affects more than almost anything else, how much you're going to get paid, even if you as an individual and your skills and what you bring to the company doesn't change at all. This is why when people say, hey, what is the fair market value for me as a software engineer or a product manager or product designer? It doesn't exist. Every company will value you differently. For example, I went out and had 2 executive opportunities, both B2C, both had similar revenue, both public companies, but the offers range from $500,000 to $2 million. And that's like a 4x difference just because their compensation philosophies were different. Sometimes if this is a role that you really want and the company you really care about working for, then you might want to try to break their frame. This will usually work for smaller companies or new divisions within companies where an executive has a little bit more power, but you want to make them realize that paying more will create better retained, better talent attracted to the company. And you might actually say, hey, I might come to this company because I really love the mission, but how am I going to guarantee that I'm going to be working with the best in class and that we're going to really have a great shot of doing this? You need to pay people better to make sure that our team is going to be great so that your company will get even better returns. And you really want to work at a company that really respects and values their talent highly and understands that investing in human capital has an ROI. If you're in a low value, low ROI part of the business, then they're going to reduce how much they're willing to pay you. So let's say you're in a customer success role and you go to one B2B startup where all they care about is sales and they don't care about retention, then you're not going to get paid as much as if you go to another company that really cares about customer lifetime value. Another tip for salary negotiations is make sure you get everything in writing. It is very common, and I've seen this before. Someone did not get things in writing. They had a negotiation. They thought they were at a certain level. They got the offer. They were super surprised. They're like, hey, why is this offer so much lower? Or why is the equity so much lower than I thought it was before? And then they asked for more. And because they had no proof and the recruiter had maybe misspoken or there was some other miscommunication, they had nothing written down. It actually reflected poorly on all sides. There's a bit of a sour taste in everybody's mouth. And negotiation didn't go nearly as well as they wished it had. And they did not get that original offer. If they had gotten the other side to email everything to them, or if they didn't agree to that, email them afterwards, CCing, saying, hey, these are the things we talked about, just sending this as a confirmation, and the other side had seen it, at least to acknowledge it, or even replied with a thank you, then they wouldn't have had any dispute at the end. And this can clear up communication during the process and avoid surprises later. So now let's do a deep dive into the interview side of the salary negotiation process. Now, during the process, remember, they need to like you, they need to think you deserve it, they need to justify it internally, and they need to think that you're still winnable. So, goals for interview process. You want to build rapport with your hiring manager, your future boss, your recruiter, who's going to be the internal person to go to bat for you. So if they don't like you, trust me, no one's going to like you. Your skip manager, who can make even bigger approvals happen for you, and the entire team, who are going to debrief with the other folks in this group later on. You want to score super highly so they can think you deserve more and be able to justify it internally. You want to show your unique value, which we'll talk about in a second. And you want to signal that you're super interested in this company. Everyone should go to bat saying, hey, I think this person not only should come here, but really wants to be here. They will be much more willing to fight for you in negotiations, if that's the case. Finally, you want to be able to manage timelines. So make sure that you're lining things up. So if you're going to have multiple offers, they line up around the same time, or that you're going to have more time to build your case if you get like a promotion at your current job. Now, when I talk about building up your unique value during this process, the way the company sees your unique value is actually what you're actually going to produce for them, not you necessarily just as a person. They think that they're going to get some outcome, and they want to make sure that there's a high probability they'll get that outcome. So for example, if you're a salesperson, you're going to hit certain quota. If you're an engineer, you're going to be able to upgrade their infra or make sure they avoid some downtime or produce some really quick, rapid experimentation so they can get things done fast, or build a really tricky feature. And they want to make sure that has a high probability of happening. And that's divided by the amount of effort that they're going to have to put into you in terms of training or just monitoring to make sure you do it well, times the risk of you not doing it as well as they hoped, or not doing it well at all, or you leaving. So ways to improve this are to say, hey, this is my past success and my impact. I've done exactly this thing before in my last company. I've worked in the same market industry, model, or on the exact same tech before. I don't need any non-company specific training here because I've already done that learning myself. Look at what I've learned in the past and how quickly. And hey, hiring manager or skip manager, here's my 6-month plan for how I'm going to actually deliver once I get on the job. That reduces risk tremendously for the other side. So let's say the interviews go great. They're saying, hey, you're going to get an offer now. This is amazing. So let's dig into the offer stage. So when they think they're going to give you an offer, a recruiter might ask you some tough questions even before you get an offer. Whenever you get a tough pre-offer question, you want to uncover why they're asking this instead of just blurting out an answer, because it's not as straightforward as you think it is. For example, if they ask, if we give you an offer, will you accept? They're not really asking, hey, we expect you immediately to accept the offer if we give it to you. You want to figure out why they're asking that. Why they're probably asking that is because they want to make sure that you're actually winnable and you're not just using them as a pawn in a greater salary negotiation game with some other company that you're really going to take the offer at. If they ask you, if we offer this, will you accept? You might say, hey, is that because you want to make sure that this is my top option? And yes, I'm still really excited about this company. And then pause and let them answer. And they might say, hey, no, it's actually because we have 2 or 3 other candidates in the lineup. Or it might be because, hey, like we know that you used to make more at your last company. We're worried we're not going to be able to offer you as much. This is useful information that you're going to want to know. And so investigating is better than just answering. If they ask you, hey, are you interviewing anywhere else? Then you want to handle this delicately too and uncover why. The real question they're trying to ask here is, are you winnable or are we going to have to outcompete someone? And if they ask you the salary expectation question again, what will you accept? You need to be able to prepare for this and make sure you can counter it. And usually it's by allowing them to make the first offer and say, we're going to figure things out from there. And if you ask them, can you explain a little bit more about why you're asking me that? The recruiter might say, hey, we want to make sure that we're not going to give you an offer that you're going to get scared from because it's too low. Then you can reassure them that we're going to get to where we need to go because I really care about working at this company. In the pre-offer call, the goals are making sure that you show your interest, provide justification, and not a number at this point in time, but just reiterate the justification about why you're excited about the company, about why you have the relevant experience, all those things I talked about in your unique value. Pre-signal value. So if you are interviewing at other companies, you can slightly signal that, but not go into too much detail yet because you still have to do the counteroffer stage, which is when you will know a little bit more about how you're going to use those other offers. The recruiter says, hey, let's jump on another call. They're going to give you the offer. So the first thing you want to do is make sure you have just neutral reactions when they give you the offer. You don't want to be super excited or disappointed to any of the things that they're going to say to you. You want to make sure that they give you the details in writing. Some companies will push back and say, we don't give offer letters unless you're actually going to accept. But if you tell them, hey, these things can be really complicated, equity terms can be complicated, I want to make sure that everything's on the table and I'm going to go over this with one of my mentors or with my significant other, then please send it to me. Or you say, hey, I'm going to write all this up and I'm going to send it to you as a confirmation to make sure that this is all correct. Then this makes it a little bit easier for you to use as counteroffer evidence later if you really need to. Next, make sure you buy time so you can review it or maybe even get other counteroffers ready. And some of the best ways to do this are to buy time through getting more calls with the hiring manager or the executive on the function, saying that, hey, I need to review this with my spouse or my mentor. And you can talk about the scheduling that, hey, I'm going to need like 1, 2, 3 weeks to do this. It's going to be a really big part of my career and I need to make a decision very thoughtfully. And make sure you ask clarifying questions. You say you're giving me 30,000 shares. What does that mean? Options, RSUs, how is that going to vest? How do you value it? What's the strike price? So many different questions are going to be needed, and you want to make sure you get everything in detail. And every time they give you a new piece of information, that's another piece that you're going to be able to use in your negotiation. So, for example, if they say, hey, this is a $400,000 a year offer, but then they're valuing the company higher than you're valuing the company, if it's a private company, then you might disagree with them on the valuation and be able to negotiate for even more equity or more cash. New info is powerful because there's a new reason to do a counter. And remember, once again, they need to like you, think you deserve it, justify it internally, and they need to still think that you're winnable. So be winnable. Okay, now you've done all that. You've talked to your mentor. You want to come back with a counter. There's a 3-step counter. First, you want to prep your questions and prep your pitch for yourself again, for what is your unique value, why you think that you want to get more equity or cash. You actually want to set up calls with the people who are going to be your advocates internally, your hiring manager and the executive or your skip manager. If you're able to come to them and say, hey, here's my 6-month plan. I'm super excited about the role. Here are the various reasons why I think that I'm going to give you the outcome you want as high probability as you want it and with low risk and low effort on your part, then they're going to be much more inclined to be able to do exceptions for you. And you can explicitly ask them at the end of those calls, hey, I'm going to be asking for more money here. Can you go to bat for me? And then finally, you send the counter to the recruiter. And you want to remind the advocates, the hiring manager or the skip, of your unique value. You want to talk about the outcome, probability, effort, risk. Here's my past success and impact. I've done this before. I've worked on this tech before. You can ask them, what do I really need to succeed on the job? So they understand that you're really engaged and you're thinking ahead. And you can give them my 30, 60, 90 or my 6-month plan for how I'm going to do really well on the job, decreasing the risk, increasing the probability that they're going to get a great outcome from you. And then, of course, you want to actually ask them to go to bat for you for higher compensation. Now, if you have multiple offers, your instinct is going to be, let me take this offer and negotiate against the other offer right away. What you actually want to do is take your top offer and negotiate that up first by itself. Then take that new top offer, take that to the other place, get them to beat it, and then you want to take that back around to the first offer to get even higher. This is actually where you're going to get the optimal gains to your offer. But of course, during all of this, you want to be very careful about what offers you put in front of what companies with what framing. You want to stay winnable. If you go to an early stage startup with a Google offer that's higher, they're going to say, hey, there's no way we're going to be able to compete with Google. And it's not even a comparable opportunity. Like, we're mission driven, we have high growth, et cetera, et cetera. You need to be able to frame the Google offer properly before you go to them so they're not A, scared off, and B, they understand how you're already adjusting the Google offer to be comparable to theirs. The other thing you want to know is, should I do this over the phone or should I do this via email? And there's no perfect answer. I've definitely seen people say you always do email or you always do the phone, but really it's personality dependent and it depends on how much you want to be able to negotiate up. So the first option is you can do all calls. You can do everything over phone with email confirmations like we talked about. This is my preferred method. because honestly, the rapport you build over the phone, the ability to adjust if people are scared about you being a jerk or just using them as a leverage situation for another offer, you can actually adjust to those situations in real time, feel likable, be winnable, and also increase your ability to look like you deserve the compensation during the calls and restate things in a way you can't do in an email. However, a lot of people are just get really nervous. They act emotionally. Even I've done this before. I've made really bad mistakes during negotiations, just saying the wrong emotional thing on the call. And I kicked myself later saying I should have just gone to email and have had to go back to email to actually recover after I thought about it more. And luckily, I was able to recover those negotiations, but that's not always the case. So if you want to go with emails, you do go with emails, but you need to make sure every email is preceded by some sort of call where you've made sure that they like you, they think you're winnable, that you have advocates like your hiring manager and your executive going to bat for you on the back end. So when you give the email with all the details, everything very well thought out, worded properly, that they're actually going to interpret that in the proper way and be willing to engage in the negotiation. So what do you do if you get a lowball offer if you're doing a tech negotiation? The first thing is you want to investigate why they're doing this. Specifically, you ask them, is this how much you think this role is worth? Or do you think specifically I'm worth this much based on implied interview performance, my experience, etc.? If they say it's about you specifically, you can try to move that back, maybe get another interview, maybe address some of their current concerns directly, but those are all things that are not on the table if you don't ask the question. If they say this is what this role is worth, then you might have to break their frame and say, hey, this is the impact I'm giving. This is what the market says for this type of role and scope. You need to break your frame and adjust your compensation levels up if you're going to really be competitive in this market. Or you might say, hey, if that's what you think this role is worth, then maybe I can take on more scope. Maybe I can interview for a level up because that's what I think I'm able to bring to the company. You might also want to use mirroring or labeling to be able to find out why the team gave you a specific score if you scored less. And this is taken right out of Never Split the Difference, which is a great book on negotiation by Chris Voss. And the way that you might do this with the labeling is say, hey, if it seems like the team didn't feel I was great for this role or good enough for this role, and that's why you're giving me this lower compensation, can we dig into what the team's concerns are? Can I talk to more members of the team? Is there something else I can show you to make sure that you understand that I'm actually capable of doing this job and I'm worth this much? Mirroring is actually just repeating the last few keywords they said. So if they say, hey, the offer is $180,000 plus $20,000 in equity, you might say $180,000 plus $20,000 in equity. And then you pause and you wait for them to fill in the blanks. They might actually offer up, yeah, this is our compensation philosophy. You did this well in the interviews. They'll try and explain away why that number is exactly where it is, giving you lots of things to be able to counter. And that pause is important because it lets them solve the problem for you. And if you're trying to make them an exception to going outside the band, then you want to actually ask them, have you ever made exceptions to this before? Have you ever paid anyone more? Okay, tell me a little bit about that. That might not be exactly me, but tell me about those situations. And you might be able to uncover what is actually necessary to get an exception made and use that process for yourself. You don't always want to counter with just, hey, I want this much more money. You might want to counter with, I think I deserve this much more money, but I'm going to do these more interviews to show that I'm worth that much, that I'm worth this extra level. Or, hey, like, I think I should add this much more scope to my role when I come on board, and that's going to be worth this. And based on my past experience, I really think I can nail this new job at this new scope. So when you do the first counteroffer, you want to thank them for the first offer. Of course, you want to stay winnable. You want to stay likable. Identify that there is still a gap. You want to do that short, unique value pitch to reiterate how much value you bring to the company, why you're low risk and high probability of giving them a really great outcome. And then here, I usually like to leave it open, but some people like at this point to actually give a number, and that's usually their total compensation anchor. And then you want to leave it up to them a little bit about how they give you equity versus cash, because internally it might be easier for them to give equity or cash. If you really care about cash, then tell them I prioritize cash. And you don't really have to explain yourself, but if it's a startup that has some sort of risk for becoming liquid in their equity, then that's something you might want to bring up. And then of course, during your counters, you can also bring up the fact that, hey, I might be losing bonuses, investing in my last company, I'm up for a promotion, or I have other offers or interviews in the loop. You don't want to necessarily tell them the numbers here unless you think it's really going to be helpful. You can bring up market data if you don't have all that. and you can talk about the risks of being in a startup versus FAANG, for example. Then they come back with an offer, they say last and final, et cetera, but you still want to be able to do a second counter offer. And then again, of course, you say thanks. You want to make sure that you can talk to your advocates again to go to bat for you to get extra if you really think that you still want to make more. And then at this point, if you think that you're really tapped out on salary and equity, you want to bring in some of those other elements. So you can suggest, hey, what about a sign-on bonus? Or what about a one-time equity boost on top of your actual equity grant for just 1 year? Or a guaranteed refresher in your second year? And then sometimes you'll want to counter number 3, and that's more typical if you have multiple companies bidding on you, or if you have some more complicated process to go through, or if they're really just not hitting the number you want and you feel like there is some reasonable extra ask for you to do. If you go to counters number 4, 5, 6, unless you're really highly valued, like an AI researcher who is coming out of a PhD program right at the top of the AI wave, then you might actually risk just decreasing how much they like you enough for them to disengage with the negotiation. And then you're going to have to go into recovery mode, which is much harder to do. The one thing you want to avoid during this entire process is ultimatums. Even if you want to walk away, do so with grace, because they may actually come back to you later. Things might change. Their budgets might change. Their second candidate might actually go take another offer. An ultimatum will really just make them think a bit less of you for forcing them into this position. And honestly, they want to make sure that they're going to hire someone that they really like and respect when they're working with them. Now, one thing that is very effective is a pre-agreement, but you want to use them sparingly. And what a pre-agreement is when you say something like, I will sign if you offer X amount, which means that you're saying, I'm not going to counter if you give me another offer, and I'm not going to take anyone else's offer. I'm just going to sign. And usually you want to leave those options open for you, especially the signing with someone else, or if the other company comes in with a way higher offer and you really still want to work at this company, you want to negotiate things up. So there's a lower upside, but then there is a higher close rate. So if you're super concerned, let's say there's a market downturn or there's hiring freezes going on everywhere, and you really just want to close the deal, then you can use this tactic to be able to make the recruiter feel at ease. This is one way to alleviate their concern that they don't want to go through all of the exception process of going to the compensation committee, getting more data, et cetera, to give you a higher offer outside of the normal process if they don't think that you're really going to sign it. So this is a great way to do that little final step at the end, especially if they're making a big exception for you. So it's very effective to close. And usually you'll do this if you're really afraid that you're going to lose the deal, but it can limit your upside. So you should usually do this after you've already negotiated a bit and discovered their price. Things to look out for when you're doing a tech offer negotiation. Companies use many different tactics here. They will try to exhaust you. You've come so far, they'll use the fact that you've already done these interviews, that you're tired at the end, you just want to sign, you just want to say, hey, I'm happy, I have a new job, thank goodness. But you've come this far, you've invested so much. So just investing a few more sentences, a couple more emails, a couple more phone calls can make you so much money over the course of your career. You might as well invest just this extra little amount at the end. It'll make such a big difference. Second, they'll try to use urgency. They'll pressure you. They'll ask you for answers. They'll say, hey, you have to give us an offer acceptance in 2 days. You need to buy your time back. You need not be the decision maker. So I need to talk to my spouse. I need to talk to my mentor. If you have other processes going, you need to make them aware at the right time that those processes are going. And you want to make sure that you have things lined up properly. And you want to also go to those other companies and try and make them accelerate. But if you're at a startup, which takes 2 weeks to do interviews, and at Google, which takes up to 90 days to do interviews and to get you an offer, then you aren't going to line things up properly. So you need to be able to make sure that you buy more time. And if you're willing to walk away, you can buy a lot of extra time. They'll also try and play on your desperation. So they might come in super low and not want to engage in negotiations with you if they think you're really desperate. And sometimes that's just an emotional thing, or maybe you let it slip that your visa's running out or something like that. But you need to be okay with walking away in most circumstances. If this is useful to you, please like this video for the algorithm so many more people can get value from it, or share it directly with someone who's about to look for a new job. And then of course, at the end of this, you want to accept your highest value offer. That's the offer that has the highest value to you, not just total compensation. And finally, you want to rest and watch the sunrise on a grateful universe and be happy about your new job. And if things didn't go perfectly, that's totally fine. Learn from the things you did well and not well during this negotiation, and be ready for the next time you're going to negotiate when it's going to be for an even higher value. Thanks everyone. See you next time.